Hey guys, Adam Rose, Vice President and Senior Loan Officer of Western Ohio Mortgage here in Sydney, Ohio. This is another episode of the Mortgage Guide Podcast. And this week we're going to talk about something a little boring but very, very important, and that's asset verification, what we find in it, some of the problems that it can lead into, and why we have to ask for certain things, right? I mean, sometimes we get that weird, well, I don't understand why you need this. Well, here's why. So, assets are one of the biggest issues that we run into when underwriting a home loan file. Okay, there's so many pieces to it, and there's so much information in there that we can gather that connect a lot of other pieces of the file to it. And one of the biggest things here is that's the biggest fraudulent piece in a mortgage application. So actually, and I pulled some statistics, 1 in 134 loan applications, all right, involve fraud. 1 in 100. It doesn't sound like a lot, but I mean that means I run into like 2 or 3 a year fraudulent cases in a small market. So it's kind of a big deal. Forged statements. When we're looking at some of this information, there's going to be like margins. That's something that we look at, right? Make sure there's not double spacing. There's some evidence there of fraudulent activity and people lying about their assets. But we're not going to dive too deep into the fraudulent piece, but just something that you need to be aware of is this is why we dive into the assets piece so much. So first thing we do, all right, so we collect all the borrower's documents, we sit down, we're doing their loan application, and we're going through the bank statements, right? I'm asking for 2 months, 2 full months of bank statements. All pages, all right? Even if the last one says intentionally left blank, but it says page 6 of 6, I need it, all right? There's nothing I can do about it. Just bring it with you. Anyways, the first thing we're going to look at is address verification, right? So we're looking at this file, and you say you live at 123 Main Street. You rent there for 3 years, whatever, pay $1,000 a month in rent. And the address is on there, says, 567 South Miami, something like that. Tells us a couple of things. One, our loan application is incorrect, right, because it might not be your current address. Two, maybe you aren't actually renting anymore, and you moved 3 or 4 months ago, never updated the statements. Now I don't have any rental history. But we're trying to make sure we're validating the information that we have on our loan application file that you have given us. So we are going to look at the address, the name that's on the account, okay? That sounds dumb, doesn't it? Well, of course it's my account. I gave it to you. Well, sure. Well, what if your name's not on it? All right? So let me give you an example. It wasn't even that long ago, it wasn't a husband and wife, all right? They were boyfriend, girlfriend. He didn't actually have a bank account, right? He just did one of those prepaid cards before, and she had encouraged him, hey, we need to start using the bank. And he had his direct deposit from his employer deposited into the bank account. His name was not even on it. That's not very smart, right? So that's an issue. Your name has to be listed on the account. But other than that, some of the things we're going to be looking for is, let's say we get a bank account and there is someone else's name on it with yours. That's not a big deal, right? Not a big deal. But maybe it's a mom, it's a dad, it's an uncle, grandfather, whatever. If it's someone other than yourself and they're not on the mortgage application either, we're going to have to now track down something called an access letter. An access letter is basically validating with the other owner of that account, stating that you, the buyer, have access to all the funds in said account. All right, so that's one thing. Two, if someone else is on that account as well and their money from their employment is getting direct deposited in there, and we're using some of that money, depending on how or when deposits are going in versus what your balances are and money's going out and what you need for closing, we may have to structure something as a gift. Like if you needed $5,000 to close and half that money is your spouse's or half that money is a girlfriend and then she's on a joint account with you, we may now have to structure it as a gift for your down payment monies or your closing costs or what have you, and that can play around with your file as well. So just a heads up there, that's some odd stuff that you really wouldn't even think about if you had somebody else on your account. It's very, very relevant for USDA buyers, right? So let's say you're unmarried, and we'll talk to the ladies out there. You're a single mom, whatever, it doesn't matter. I don't know why I gave that example, but you're single and you're buying a home, but you have a fiance, you have a boyfriend, you have someone else that's attached to your account, or they're making transfers into your account. We got to document it. That gives us an idea that someone else is going to be living in the property, right? Why is that relevant? You wouldn't think it would be, but certain loan programs, specifically USDA, they do something called a household income limit, right? So we now have to document who all is going to be living there and how much money the other occupants make as well, okay? So like a household of 4 people, you make 110 grand or less, and it's up a lot higher than that for a household of 5 or more. But that's the point here. Now this could kick you over the income limit, and I got to document this other occupant's tax returns, and W-2s, and bank statements, and pay stubs to document all this information. So that's why that can be relevant as well. So that's just the names on the account and where that can lead. And there's so much more to that. So we're just going to kind of scratch the surface here a little bit. So validating how much money you have. One would think that this is the main purpose of a bank statement, right? If you're doing $10,000 down payment or you need $10,000 to close, we got to figure out that you have that money to close, right? And we're going to be going through the bank statements to validate the information. That money can obviously come from a lot of sources. You can get a gift money from a relative. You can get it from your 401k. It could be accumulated savings or seasoned money, meaning we're not seeing any deposits. But we have to validate how much you have. So where this is leading me to is large deposits. Okay, this is common, unfortunately, but a large deposit that comes flying into the bank, we have to document where that money is coming from. And we kind of touched on this some podcasts way back when about assets and the asset verification. And we're kind of bouncing around the idea of don't deposit cash, right? This is an issue. If you deposit cash, that is a non-documentable source. It's very, very hard to source where this money officially came from. We may not be able to use it for your mortgage transaction. So please try to avoid that. So we are going to be looking for cash deposits. It's going to help us with your income verification as well. Right, that's another little piece of the fraud, right? So if you give me a pay stub and it shows your net check should have been $950, but your deposit shows it was $908, why the discrepancy? Is there something else going on that we need to know about? If you're allowed to deposit checks, so if we see money's coming in, there's deposits, it's very easy. We'll get a copy of the check, see where it came from. It could dictate you got a bonus. It could be you sold something that we need to document. Again, all things that are documentable, but this is what we're looking for. And it kind of really is related to the anti-money laundering piece that's very, very prevalent in the mortgage industry today is, the transfers of large sums of money from other outside bank sources, foreign assets, cash deposits, basically illicit activity, right? That's what they're trying to limit. But a little rule of thumb that I usually try not to mention to people unless I have to pull it out of my back pocket. Let's say you did do a cash deposit and FHA has something called it's a 1% rule, okay? So let's say you're, $500 short to close and your loan amount, this is $100,000. Technically speaking, FHA will allow you to deposit 1% of your purchase price into the account without having to ask questions, which we've found after delivering some of these loans. That's not quite the case. We have to do some fighting there, but technically those are the rules. And conventional financing is a little bit more lax on that. It's whatever consistent with your deposits and your normal activity in your banking accounts. So, but just forewarning, all right? Just try not to deposit cash. It makes our life hell. All right, so we got the validation of that. On the 1% rule, though, I do want to touch on structuring deposits, okay? So I was talking about anti-money laundering just a few moments ago. And people take this 1% rule to heart because you can Google it, right? You can find it very easily, what you can and cannot do. So some people take it upon themselves if they have all this cash and they need to try to use it for a transaction, that they'll decide, hey, I'm going to deposit $500 here and then wait a week and deposit $400 here, wait a week. I'm going to deposit $300 here. And they try to accumulate enough money for their down payment. That is structuring of deposits. That is the first rule or the first step of money laundering. All right, so it's not going to be okay. All right, that even if it's less than 1%, not good. All right, we can't use it. So just a heads up there. And the bank statements are also going to tell us your average balance. Okay, so year-to-date average balance, your monthly average balance. Why is that important? So it tells us if there's a recent influx of cash being put into the account. Might give us an indication of something else going on. So you can kind of see where we're going with this. There's a lot of fraudulent activity that happens in the bank accounts. And we could, if I had an underwriter sitting here, we'd be talking about this for hours. So you're welcome. I don't have anybody on the show. Other income. So let's say we got the bank accounts and we see your direct deposit coming from, I don't know, Honda, for example, and your spouse's deposit is coming from NKP, right? All good, fine and dandy. And then we see another deposit coming from another employer, or maybe it's just a check deposit, right? You deposited a check for however much, $1,000. Well, gives us a couple indications. Is there other income? Okay. Here's why it's important. So certain loan programs, if there are other deposits, then it could mean that there's some self-employment income. I might have to obtain some tax returns to document that you are self-employed, right? And this is where this money is coming from. Receipts, invoices, whatever. It depends on the business. It's also very, very relevant, okay, for USDA financing. Extremely important. Because like I mentioned earlier, USDA has an income limit. So if you have all these other deposits from a second job, self-employment income, side gigs, whatever, we're going to have to document this and annualize that potential income to still ensure that the household income is under their limitations, okay? So that's what we're looking for there. And they will, I'll tell you what, they're picky as hell, okay? You got a $50, $80 deposit, they're going to ask about it. So it's annoying, I know, but we got to deal with it, unfortunately. So going through the bank statements, we're also going to see things like NSFs, non-sufficient funds, right? So you get an overdraft. Why is this important? So, not only is it about validating assets and seeing how much money you have in the bank, but, over the last 6 months, if you've got, 5, 6 overdrafts with these overdraft charges and things like that, it's showing the underwriter there's some mismanagement of funds, right? I'm not saying it doesn't happen to the average person. It does. It absolutely does. There's been times where money was supposed to be deposited, didn't get deposited on time, and there was an automatic draft from an account that you were paying you forgot about. It happens, okay? But consistent activity of NSFs, no bueno, all right? It's not good, especially when we're looking at, hey, I spend $1,000 a month in rent, okay? I have $0 in the bank, and I sometimes overdraft, and I'm going to a $2,000 house payment. So the big question is, how are we going to afford this $1,000 gap between what I'm paying today and what I'm paying on this potential house? If I'm overdrafting my account all the time, or I'm at zero, my average balance is $30 a month, how are we doing this, all right? So that's an underwriting piece then that, again, a lot of people don't pay attention to, right? They're not thinking about that. You would think, though, it's kind of a common sense thing when we're reviewing this information. So just a heads up there, okay? That is a very, very important piece of this. On the NSFs, so the mismanagement of money is the biggest piece, but there's also housing shock, okay? What is housing shock? Housing shock says, example again, spending $1,000 a month in rent, I'm going to $2,000. I'm doubling my house payment. We got housing shock, right? Well, why we're using the bank statement is not to necessarily confirm, because I can tell if you have housing shock based off what you told me you're paying in rent, what your house payment is. But to avoid housing shock, we still got to document you're actually making a rent payment, right? So if we got all your bank statements, this is the only bank account you got, and I never see a check clearing for your $1,000 rent or a Venmo transfer or what have you for your rent, who's actually paying it? How are you paying it? Someone else on the lease? Someone else paying it for you? Well, if that's the case, you might have housing shock automatically, right? Because you don't have any existing house payment or rent payment that I can confirm that you have currently. So a lot of odd things going down that path. And then the last thing I want to touch on is other debts, okay? It gets a little awkward. Some people are uncomfortable with it, but we do comb through all of the money that you're spending, all right? We're going to see if there's some payday loans out there. We're going to see if you have some buy here, pay here agreements, extend pays. Have you seen like things like Klarna or, hey, if you spend a lot of money on your credit card, like through your bank even, they're going to say, hey, do you want to extend this over 6 months? Well, that's a contractual debt obligation. So why they're looking for these things is those rent-a-centers, the Aaron's Rentals, the buy here, pay here's, the payday loans, all this stuff. These are contractual debt obligations that don't report on your credit report. Okay, so if your debt-to-income ratio is already at like a 40% or 45%, we're kind of maxed out depending on the program, and we find that you spend $300 a month on furniture over at Aaron's Rentals, I have to include that in your debt-to-income ratio. Okay, so we're looking for those other debt obligations that are contractual. Now you're thinking you don't have to worry about your utilities, you don't have to worry about your phone bills or your car insurance or anything like that. Okay, we're talking about contractual debt obligations specifically with someone that you borrowed money from. All right, not necessarily a service. That's someone where you are physically going to have to pay that money back on a weekly or biweekly or a monthly basis. One of the ones that catches up a lot, and it's very common around here, Mac tools, right? Snap-on tools. We have a lot of clients that have those, and sometimes they're reporting because they got an installment debt through them, but sometimes they're not, and they just have an agreement like a revolving line of credit that they buy every week, and they make weekly payments. So we just got to be careful on that, and that's the whole purpose of them combing through all those debt obligations and making those payments and making sure it's not a reoccurring debt we have to count against you. So I hope that information was helpful to the buyers out there, real estate agents as well, and you're kind of asking us why we're asking for certain things, because sometimes the buyer doesn't want to come directly to us with their concern. They sometimes seek out the counsel of the real estate agent. So that is why, and you can help back us up on why we might need that information. So hope that information was great, guys. Again, check us out on YouTube and subscribe. Check us out on Apple Podcasts and Spotify, and we will have some more information for you guys next week.